Ladies and gentlemen, now introducing
It's time for me to show you. There is no more time to keep up. It's time for me to show everything to you. There is no more time to keep up.
Villa Berhad is one of the shoe manufacturers that provides a wide range of products across the country. The company is having a problem in managing its own working capital and utilizing the current asset. The company is not able to supply enough products during any Malaysian celebrate festivals due to lack of manpower for production. The company is also not able to invest the money that it has at the bank. They tend to keep the money in the bank without having any investment return. Moreover, the company also seeks for a short-term financing to expand the production line. This situation has led the company's profit to drop from the previous year's performance, and some of the main company's goal cannot be achieved. The company would like to appoint a consultant to give them the suitable advice as it can improve the company's performance in the future.
Current assets are short-term assets such as cash or cash equivalent that can be liquidated within a year or during an accounting period. These are calculated to determine the business liquidity capacity. They are a company's short-term resources, often known as circulating or floating assets. There are items under current asset, which is cash or cash equivalent, marketable securities, account receivable, and inventory. Now, I will explain for the item under current assets. Firstly, cash or cash equivalent. For definition, assets in the current account are cash or can be quickly converted to cash. Cash equivalent are certificates of deposit, money market funds, short-term government bonds, and treasury bills. To qualify as current assets, this item must not have any restriction that inhibit their short-term liquidity. Second, marketable securities. Marketable securities are the account where the total value of liquid investments that can be quickly converted to cash without reducing their market value. Third, account receivable. Account receivable is the value of all money due to a company for goods or services delivered or used but not yet paid for the customers, which is entered in current assets as long as the account can be expected to be paid within a year. And lastly, inventory. Inventory, which represent raw materials, components, and finished products that are included in the current assets account. However, different accounting methods can adjust inventory. At times, it may not be as liquid as other qualified current assets, depending on the product and the industry sector.
Current liabilities are companies' short-term liabilities that are expected to be settled within a year or during an accounting period. There are 5 components in current liabilities, which are account payable, trade credit, short-term bank loan, commercial paper, and accrual. We will go to the first component, which is account payable, trade credit. Trade credit is an agreement in which a customer can purchase goods without paying cash upfront and paying supplier at a later scheduled date. Usually, businesses that operate with trade creditors will give buyers 30, 60, or 90 days to pay with the transaction recorded through an invoice. Next one is short-term loan. Short-term loan is a type of loan that is obtained to support a temporary personal or business capital need. It is a type of credit. It involves repaying the principal amount with interest by a given due date, which is usually within a year from getting the loan. A short-term loan is a valuable option especially for small businesses or start-up that are not yet eligible for a credit line from a bank. Next, we will go to the commercial paper. Commercial paper is an unsecured short-term debt instrument issued by a corporation. It is typically used to finance short-term liabilities such as payroll, account payable, and inventories. Commercial paper is usually issued at a discount from a face value.
As we can see from the current asset and current liability that have shown the components of the current asset that is suitable for SYAFIQAH is market securities. This is because they can get cash quickly from their investment without reducing their market value. So they can get cash anytime when they need it. Next, we will go to the component of current liabilities that is suitable for their company is account payable, which is trade credit. From this component, we can see that if companies use this component, they can buy goods from suppliers without paying for them in advance. Even they will not be charged any interest which is forbidden in Sharia. We hope this component will help SYAFIQAH to improve their company's performance in a better direction. In conclusion, current liability are a company's financial commitments that are due and payable within a year. Current assets are projected to be consumed, sold, or converted into cash within a year or within the operational cycle. Current assets are all of a company's assets that are likely to be sold or utilized in the next year as a consequence of normal business activity. Current liability are a company's financial commitments that are due and payable within a year. Current liability are often settled using current assets, which are assets that are depleted within a year. Current assets include cash and account receivable, which is money owed to the companies by customers for sales.